Hello and welcome to this Croner eCPD module prepared by Stan Dencher. This module helps you understand how the law works as regarding claiming VAT incurred on costs. Such VAT is often referred to as input tax or input VAT. If a mistake is made, it can be expensive and tempt HMRC to investigate. In relation to deciding whether to claim input tax, the appropriate question may be, is there anything in the law that stops claiming the VAT that was incurred on costs? Generally, input tax is claimable if the claimant is a taxable person, the input tax relates to goods or services used or to be used for the purpose of any business carried on or to be carried on by the claimant, the input tax is not charged on an item which is specifically non-deductible, the claimant was not registered for VAT at the time of supply, but the input tax relates to certain supplies received within certain time limits, either before VAT registration or after deregistration. The claimant is partly exempt, but usually only part of the input tax is claimable. The input tax was charged on the supply which was made to the claimant. A valid document is held as evidence unless HMRC otherwise permit, and the supply was liable to VAT at 20% or 5%. A person is a taxable person while he is or is required to be registered for VAT in the UK. The words used or to be used mean that a claim for input tax is not restricted to goods or services which are for immediate use. Provided that the taxable person retains an intention to use the goods or services for a taxable purpose, his entitlement to claim input tax remains, subject to the time limit for claiming. The courts have held that if it does not matter that no supplies were made in the period in which the input tax was incurred, Member States may not impose conditions on claims even if, because of events outside the claimant's control, no taxable supplies are ever made, and the question is whether, when the input tax is incurred, there is an intention to use the goods or services for making taxable supplies. The law cannot refer to all items on which VAT can be claimed because the list would be almost infinitely long. Thus, the law deals specifically with only the exceptions to the general rules. Usually, the best question is not, is VAT charged on this item claimable, but, does the law provide for this item to be treated specifically in a particular way? Any VAT charged on the following items is specifically non-deductible, i.e. blocked. Certain motor cars, a motorcycle or a van is not a motor car. Only 50% of the VAT on car leasing charges can be claimed by the lessee if the lessee makes any private use of the car and if the lessor recovered the VAT charged on the purchasing of the car. Secondly, business entertainment, except concerning employees. Thirdly, in the case of claims by builders, articles of a kind not ordinarily installed by builders as fixtures in new houses. Fourthly, certain works of art and goods supplied under the second-hand scheme. Fifthly, goods imported for private purposes. Sixthly, certain supplies to tour operators. And finally, input tax which is attributable to exempt supplies and is not de minimis. Usually, establishing whether a supplier is registered is relatively straightforward, as HMRC should issue a certificate of registration. In principle, a partially exempt business can claim all input tax incurred in relation to making taxable supplies, and cannot claim any input tax incurred in relation to making exempt supplies. Input tax incurred on supplies which are used for both making taxable and exempt supplies is called residual input tax. Residual input tax is apportioned between the two activities. Only the part relating to the taxable supplies can be claimed. A shareholder of a VAT-registered company may buy the freehold of land and buildings for use by that company. However, the company cannot recover any VAT incurred by buying such land and buildings, as the supply of the freehold was not to the company but to the shareholder. The shareholder must be registered for VAT in order for him to claim such VAT. Some shareholders register for VAT and charge the company a rent for using the freehold, so VAT is charged on the rent. Generally, the following evidence must be held in order to claim input tax. 1. A VAT invoice that contains all the required information. 2. A self-billed invoice from a person who has been approved by HMRC to issue one. 3. A less detailed tax invoice where the VAT inclusive value of the supply is £250 or less, or 4. An authenticated receipt for stage payments in the construction industry. Alternative evidence of input tax may be accepted by HMRC or a tribunal in certain circumstances. The fact that a person holds a document purporting to be a VAT invoice does not give any right to claim input tax if no underlying supply was made. Sometimes VAT is incorrectly charged on a transaction. This may be due to difficulties in understanding the law, and the supplier prefers to play safe, especially if the customer is fully taxable and so may recover most VAT that is charged. In such instances, as VAT was not properly charged on the transaction, the VAT is not input tax in the hands of the customer. The entitlement to input tax credit is rescinded if the supplier is not paid within 6 months of the later of 1. The supply being received, and 2. The invoice amount becoming due. Any claim for input tax must be made within 4 years of the end of the VAT return period to which it relates, otherwise it is capped. Usually the 4-year time limit is applied strictly. If a VAT return overclaims the input tax, a civil penalty may arise for careless action or failure to take reasonable care, up to 30% of the potential lost revenue or PLR. Secondly, deliberate but not concealed action, 20% up to 70% of the PLR, and deliberate and concealed action, 30% up to 100% of the PLR. Where the percentage fits in that range depends on the quality of any disclosure and whether the disclosure was prompted. The key things to remember from this module are first to establish the relevant facts, then apply the law as summarized in the slides to decide if input tax is claimable on a transaction and to decide the time limit for claiming. Don't ask whether certain VAT is claimable. Turn round the question and ask whether anything in the law stops the VAT being claimable. The default treatment is for all VAT to be claimable. A commentary on VAT cannot refer to everything on which VAT is claimable because the list would be infinitely long. The law deals with only the exceptions to the general rule. I trust you found this module on claiming VAT incurred on costs informative. Please exit this activity and click Launch Quiz to complete the quiz. Once you've completed the quiz, you'll be able to print out your personal certificate. The module homepage also contains a link to the notes that accompany this module and to further resources available to you from Croner I, including commentary, the law and HMRC's publications. Goodbye and thank you for using Croner I eCPD.
For further information and to view the full range of Croner I eCPD modules, visit our website at croneri.co.uk.